If you're a business owner bringing in real revenue, $500,000 to $7 million, your bill is probably one of your biggest expenses. And one of the easiest, legal, IRS-approved ways to cut that bill is using the right retirement accounts, especially with the new 2026 contribution limits. I'm Trevor Densmore, founder of TJD Accounting Tax. We help business owners reduce their taxes, clean up their books, and use smarter financial strategies to grow long-term wealth. And here's the truth. Most business owners underfund their retirement, pick the wrong plan, or contribute too late and leave thousands of dollars on the table. But with higher 2026 limits, you can shelter more income, save more money, and significantly reduce your taxes. Today, I'm breaking down the exact 2026 limits, what changed, which retirement plan is best for you, and how to actually benefit. Let's get into it. Let's start off by talking about what actually changed for 2026. The IRS increased several retirement contribution limits due to inflation and cost of living adjustments. Here's what's new for 2026. 401k employee contributions, the employee contribution limit increases from $23,500 to $24,500. 401k total contribution limit. That's employee plus employer combined. The total limit is now approximately $72,000. Catch-up contributions. If you're age 50 or older, the catch-up contribution increases to $8,000. And under Secure 2.0, business owners ages 60 to 63 may qualify for enhanced super catch-up of up to $11,250. Traditional and Roth IRA. The base contribution limit increases to $7,500. If you're age 50 or older, the IRA catch-up contribution is now $1,100. Now, Simple IRA. The base contribution limit increases to $17,000 with higher catch-up limits to older participants. SEP IRAs remain based on 25% of compensation with a maximum contribution of $72,000. What does this mean for you? You can shelter more income, reduce your tax bill, and build wealth faster if you're using the right plan. Now let's move on to best retirement plans for business owners. There are 4 main retirement plans business owners should consider. The first plan is a solo 401k. This is often the best option for single owner businesses and high profit entrepreneurs. You can contribute as the employee and as the employer, up to approximately $72,000 total. You also get traditional and Roth options, plus flexibility most plans don't offer. 2. SEP IRA. Best for high income owners who want simplicity. You can contribute up to $72,000, but if you have employees, you must contribute for them as well. 3rd, traditional or Roth IRA. The base contribution limit is $7,500, plus a $1,100 catch-up if you're over 50. Roth IRAs grow tax-free, but they have income limits. If you're above the income limit, you can still use a legal strategy called a backdoor Roth. 4. Simple IRA. Good for businesses with employees that want lower administration than a full 401k. The base contribution limit is $17,000, which enhanced catch-up options for older owners. Let's move on to how to maximize these limits. Let's talk strategy, because choosing a plan is only half the benefit. Strategy 1, reduce your taxable income fast. Contribute as both the employee and the employer. If you max out a solo 401k at $72,000 and you're in a 32% tax bracket, that's roughly $23,000 in federal tax savings. Strategy 2, use a solo 401k for flexibility. A solo 401k allows pre-tax contributions, Roth contributions, or a combination of both. Perfect for self-employed owners with no full-time employees. Strategy 3, use Roth contributions in lower income years. If revenue dips or you have large write-offs, a Roth strategy may make more sense. You pay lower taxes now and enjoy tax-free withdrawals later. Strategy 4, backdoor Roth IRA. If your income is too high for both direct Roth contributions, you can still get in using a backdoor Roth strategy. This is extremely common among high-earning business owners. Strategy 5. If you have a team, a simple IRA or 401k can still provide major tax benefits, including employer deductions and potential tax credits. Now let's discuss which plan you should choose. Quick cheat sheet. This is how most business owners should think about it. Solo 401k. Best if you're a single owner business or only employ your spouse. Gives you the highest contribution limits, the most flexibility, and the biggest tax savings. SEP IRA. Best if you want simplicity and consistently high income. Easy to manage, large contribution limits, but not ideal if you have employees. Traditional or Roth IRA. Best as a personal add-on on top of the other retirement plans. Lower contribution limits, but powerful long-term tax benefit, especially with Roth or backdoor Roth strategies. Simple IRA. Best if you have employees and want something easier than a full 401k. Lower limits, but lower administrative burden and predictable employer costs. The right plan depends on your income, your employee situation, and your tax goals. If you're serious about reducing your tax bill and building long-term wealth, retirement planning is not optional. At TJD Accounting Tax, we help business owners choose the right plan, optimize contributions, and keep more of what they earn. If you want to know which plan is best for you and exactly how much you should contribute, book a free call using the link in the description. I'm Trevor Densmore with TJD Accounting and Tax. Thank you for watching, and I'll see you in the next video.